Section 4 goes on to motor vehicle insurance. And this is going to be not much more complicated than what we've looked at so far. This is going to be about looking up tables and finding out where things sit, but we'll get some exposure to how these numbers are actually computed by auto insurance carriers. The textbook describes some of the crashes that occur, the crashes per 10,000 drivers, and you can see that the age of the driver has a significant impact on the number of crashes. Now, whether that's a function of risk or lack of experience, I don't know if anybody really knows that, but you can see that the younger the person is, the more likely they are to have an accident. So between 16 and 19, 903 out of 10,000 drivers have accidents. And then you're at your safest when? Ooh, it looks like between 60 and 79 years of age. So, so I'm not even the safest driver yet. I'm still between 40 and 59, but it won't be too much longer. I'm 54 right now. Is that what I am? 54? Yeah, I think I'm 54. Yeah, 54. So I still have a few years in this section, and then this next year my insurance should go down even more. But then you reach a new level of risk when you actually go to the next age bracket between 80 and 89. So I'll be a little bit more risk, So my premium should go up then. I'm a ways from that, so I'm not too worried about it right now. Okay, so the premium or cost of insurance policies is determined by actuaries. Actuaries are statisticians that look at statistical information and analysis and try to predict what's going to happen based upon the information in the future. And so these, by the way, this is a very lucrative job to be in. Actuaries make very good money. But usually you're going to have to be working, to be an actuary, you're probably going to have to be working in a larger city. So there's not a whole lot of job opportunities for actuaries in places like Visalia or Tulare or smaller cities in this area. Fresno, maybe. Usually the actuaries have most opportunity to work for larger companies that are in places like Los Angeles or San Francisco. Okay, so these actuaries look at frequency and severity of accidents, and based upon that, they include some factors like location of the insured vehicle. So places like Los Angeles are going to be a little bit more expensive because they have a very high volume of cars there. Age and the sex of the driver. Unfortunately, men tend to be a little bit more of a higher risk because I guess we take more risks. Women seem to be better drivers in terms of risk, and so they'll probably receive a lower premium. Miles driven, if you drive a lot of miles, you got higher risk. If you drive less miles, then you'll have a lower risk. And driving history, which that's probably the biggest factor for individuals. If you have a number of incidents or accidents, then your insurance premiums are going to go up. All right, so the first thing we need to purchase when most of us want to drive is called liability insurance. Liability, by the way, in the state of California, it's a law that you must have at least liability insurance in place. And what we're trying to do is protect others. So liability or bodily injury protects the insured in case he or she injures someone else with a vehicle or car. Many states have minimum amounts of liability insurance coverage. I want to say California is 1530. I want to say that. What does that mean? The 1530 means that you will pay up to $15,000 for an injury to one person, and the maximum payout for two people or more is going to be $30,000. That's still, in the context of the amount of damage you could do with the vehicle, is still relatively low, but that is the minimum requirement, I believe, for the state of California. So once you get a driver's license, if you want to be legally driving in the state of California, you have to have your name listed on an insurance coverage for liability. Most experts recommend that the liability limits be somewhere around 100 and 300,000, meaning 100,000 for each individual and 300,000 for the entire vehicle. That doesn't mean that you can't be sued for more, but that's generally speaking going to cover most situations. Okay. So a table that's used to cover liability and medical insurance will be based upon territories. Where are you driving, and also the amount of coverage. So 1530, 2530, 15100, or 5100, and 100 and 300, and 250 to 500. Okay. So from here, it's just look up. So Martha Spencer owns the dollhouse and is in territory 2, so that gives us right here, and wants 130 liability insurance coverage. So 130 coverage. Find the amount of premium for this coverage and the amount of medical coverage in the insurance. So we'll look under territory 2 and 130. Territory 2, 130. So we're looking at $378. So her premium will be $378 just for liability and medical coverage. And this cost includes 5,000 medical coverage. So if there's any medical required for anybody who's injured by the vehicle, they will pay up to $5,000. Now, once we get beyond liability insurance, then there's property damage insurance, and this liability coverage pays if you injure somebody. So the next, what we wanted to look at is property damage insurance. Liability coverage pays if you injure someone, but the property damage pays if you damage someone else's property, such as the automobile or the building. So if you have an accident, you need to pay for the damage to their vehicle. And so in addition to the limitations we're looking at, we have another table for property damage limits. And now we can look at an example here to see how that works. Find the annual premium if Martha Spencer in Territory 2 wants property damage coverage of $50,000. Territory 2 and coverage for $50,000. Property damage coverage of $50,000 requires a premium of $223. We could look at that. $223. So territory 2 for $50,000 property. That's $223. Look up tables. Pretty straightforward. So comprehensive coverage pays for damages to any insured vehicle caused by a fire, by theft of the automobile, by vandalism, and by other similar events. Collision coverage pays for repairs to the insured vehicle when it is being driven and collides with another object. So comprehensive and collision really protects your car. So if you buy the insurance, if you want comprehensive and collision, you pay for, you're trying to cover your own vehicle. The liability covers the other vehicle. The comprehensive and collision covers your own vehicle. Okay. Now, generally speaking, when you're trying to cover your own vehicle, there's going to be a deductible in play, all right? So in the event of damages to your vehicle, you may pay the deductible and the insurance company pays the balance. For example, assume a tree falls on your car during a storm and that you have a $1,000 deductible for your comprehension coverage. The amounts that must be paid by the insured and the insurance company are shown below. So if you had $3,840 of damage to your vehicle, well, first you pay $1,000, the insurance company pays $2,480. Now, you must remember that the objective of insurance isn't necessarily to cover you for 100% of a loss, whether it's fire, life insurance, automobile insurance. It may not be that we're looking to cover 100%, because 100% coverage on even health insurance, 100% coverage on anything is very expensive. However, the objective of insurance is to help ensure that you don't go into bankruptcy as a result of a loss. It's a risk that you have, and the last thing that you would like to happen is if you have an accident and you are essentially put into bankruptcy because of that accident. So to have a very high deductible is not necessarily a bad thing. I mean, most cases when we have some type of an accident, we're disappointed if we have to come up with a few $100s or $1,000 or $2,000. But most people on average, most people can come up with that 100, that's 500, or even 1,000 or 2,000, and not go into bankruptcy as a result of it. It may be a bit of a strain. You may have to build into your savings or use credit cards to increase, but you're not likely going to bankruptcy for it. So remember that insurance is just trying to avoid bankruptcy, not necessarily to cover every single penny, because that's very expensive when you have that. So when we have comprehensive and collision insurance, again, based upon an age group and the territory, the age group, and the symbol by which it falls under. So let's take a look at an example here. Martha Spencer owns the dollhouse, is in territory 2, and has a 2-year-old minivan that has a symbol of 8. Use the comprehensive and collision insurance table to find the cost of A, comprehensive coverage, and collision coverage. So territory 2, 2-year-old minivan, symbol 8, 228. So we'll go back to the table, and we know the symbol is 8. We know it's territory 2, and the age group is 2. So we're going to come across here, and we'll go to 8. It looks to me that we're looking at a premium cost of $68. $68. Let's see if we're right. Yep, comprehensive and collision is $68. So that was for the comprehensive. And the collision, we'll take the 2 and 2 and then scroll down to 8 over here, and that gives us 98. So the collision is going to be $98. The cost of the collision is $98. Okay, pretty straightforward. Look up. One thing the book discusses is uninsured motorists, which means this is an insurance coverage that you may purchase in the event that you're in an automobile accident with someone else who is uninsured. This actually was a saving grace for me once, because I did have a pretty major automobile accident back in 1996. It was the same year my daughter was born. That was, I guess, 24 years ago, 23 years ago. And actually, it was 24 years ago because it was in February, so 96, yeah. So it was a head-on collision, in which case I suffered essentially a complete. I broke my leg. It broke my leg, but it shattered a portion of my femur, so there was a portion that was just gone. I don't know how that happened. I was the driver. I must have hit something or something. Maybe the steering wheel hit me, whatever. But it was a head-on collision. The driver of the other vehicle actually ended up a lot worse. They ended up at least temporarily paralyzed. So that was very unfortunate. The responsible party, the party that was responsible for the accident, was, in this case, was not me. It was the other driver. And I can go into the details of it, but honestly, I don't even remember the accident. I just have read the police reports afterwards. It's all gone from my memory. I was in the hospital for about 5 days, and I don't remember any of it. In fact, I don't remember anything until about the second day I woke up from surgery on my leg. In any event, this driver of the other vehicle, who was seriously injured during that accident, it was very unfortunate, but In fact, it was their fault, and so therefore, under normal circumstances, you would expect that their liability insurance would cover for most. Unfortunately, it was an uninsured motorist. The good news, I had uninsured motorist coverage, so therefore, not only was all the damages to my vehicle covered, but I also was able to lay a claim of pain and suffering to my insurance carrier. And they paid me some money. It probably was way too low, but I wasn't in a position to go and hire an attorney to try to get more money. I just accepted what they had given me, and we moved on. Thank God that I was alive, that I was okay. My leg pretty much healed for the most part. And I don't know, I kind of think that the other party actually recovered from the accident as well. In other words, he was able to regain the feeling in his legs. I just don't know where they ended up. So God forbid that, even though it was his fault, it was unfortunate, and it ended up being a very bad situation for him. In any event, let's take a look at example 4. Martha Spencer in Territory 2 wants uninsured motorist coverage. Find the premium in which the uninsured motorist insurance table. Okay, where's the end? There it is right here. So she's in 2, 1, 2. The basic limit is 219, so very clear, 219. Pretty straightforward. Janet, let's look at what Janet, okay, there's a youthful operator factor. So some of you are relatively young, and so because of that, you pay a premium on your insurance, primarily because younger people are of higher risk. You saw that table at the beginning of this section, and that table clearly indicates why insurance companies charge a higher premium, because younger drivers are a higher risk. For whatever reason, whether it's just experience or the willingness to take on more risk, I don't know, but definitely younger drivers are of higher risk. Therefore, if you are 20 or less years of age, you have a 2.35 factor that's taken into consideration with driver's training. If you haven't had driver's training, then it's going to be 2.95. So I know some of you wait till you're 18 before you get your license, but you do end up paying a little bit of a premium for it, because without driver's training, you'll end up paying a bit of a premium on insurance. If you're 21 to 25, same deal. You get a 2.1 youthful factor, 2.4 without driver's training. So you might want to reconsider that. I think driver's training, that gives you a better rate. Maybe over the long haul it's cheaper. I don't know. I don't know if driver's training is real expensive. You can check in on that. So anyway, Janet Ito lives in Territory 4, is 22 years of age or years old, has had driver's training. And has no speeding tickets. She drives a 5-year-old car with a symbol 7. She wants $25.50 liability policy with these coverages: $2,000 in medical payments, $10,000 property damages, comprehensive and collision, and uninsured motorists. Find her annual insurance premium using the tables in this section. So I'm not going to flip back and look through these. We've already done every single one of these independently. But in this problem here, you're actually putting it all together, so to speak. So we would go back to the original tables we looked at for $25.50 liability coverage, taking into consideration the territory and the years, the age. She would end up with $362 of premiums associated with that coverage. She would have a $10,000 property damage of $185 of comprehensive insurance. We scroll back to that, get that number. Collision, 84, and uninsured motorists. All these we've already done independent of one another, and now we're putting it all together so that her annual premium would be $954. Okay, but that's the annual premium for anyone. Now we're going to take a look at the factor that we have because she is younger than 25. So if we go back up, she's between 20 and 25 years of age. She has had driver's training, so she's going to get a factor of 2.10 to add that factor. In other words, to make it worse than what you would have thought. If it were for me, I would have been at 954, but because she's 25, she's going to have to add the factor of 2.10. So her insurance for all this coverage is going to be more like $2,003.40. Sucks to be young in this case. Although I would gladly pay that premium in order to be a younger person, but maybe not, I don't know. Okay, James Benson has 2550 liability insurance coverage, 25,000 property damage, and $500,000 or $500 deductible collision insurance. While on vacation, he was at fault at an accident that caused $5,800 damage to his car, $3,380 in damage to another car, and severe injuries to the other driver and his passenger. A subsequent lawsuit for injuries resulted in a judgment of $45,000 and $35,000 respectively to the other parties. Find the amount the insurance company will pay for repairing Benson's car, repairing the other car, paying the court judgment, and how much will Benson have to pay for the injured parties. Well, first of all, the insurance company will pay, based upon a coverage of, will pay $4,800. That's $5,800 minus the $1,000 deductible. So there was $5,800 damage to his car. So he was at fault in the accident that caused $5,800 to his car. If we go back to the tables, we'll see that he had a $1,000 deductible, and so therefore he would the company would have the insurance company. So therefore the insurance company would cover $4,800. We move on to repair of the other car will be paid for property damage limits, which was $25,000. That was the property damage limits. Here the total repairs cars for $3,380. That would be paid in full because the damage was $30. So that was in the property damage limits. So there was no payment that Benson had to come up with. Let's see, since more than one person was injured, the insurance company pays the limit of $50,000, $25,000 to each of the two injured. Let's see, the subsequent lawsuit for injuries resulted in a judgment of $45,000 and $35,000 each. So that ended up being $80,000 for those totals. So the insurance company will pay the limit of $50,000 because that's the type of insurance he had. And so how much would he have to pay? Benson is liable for the $30,000. That means of the $80,000 that was claimed, the insurance will cover 50 of it, but he's going to have to come up with 30 of it to pay for the difference, plus the $1,000 deductible. So all this insurance he has in play, he's still going to end up with $31,000 of money that's going to come out of his pocket. So, you got to be careful with this. This kind of implies that even the minimum limitations or limits that have been set by the state of California of $1,530 may be too low for many drivers. So be careful because you may end up with a judgment against you for much more than the limits in play. Okay, that covers exercise 13.4. We have one more and we'll be done with this semester.